The RBI's move to keep the policy rates unchanged has surprised many, as most experts were expecting a 25 basis points hike. The RBI governor, however, has emphasized that the pause was not a pivot in its policy. But the market experts are not convinced. They believe the RBI's justification for the move was unconvincing.
The pause is only for this particular meeting. The fight against inflation continues. So he has said that they will take action, further action to attain their objective of inflation. And inflation is significantly higher than their target. So, I guess there will be more tightening that would happen. The justification offered for a pause is not very convincing, though, because initially in the summary, the governor emphasized that the fight against inflation is very much there, and there was a kind of a hawkish sort of sentiment that was kind of offered.
Markets on their part remained volatile during the day, with the benchmark S&P BSE Sensex and Nifty 50 indices eventually settling 0.24% higher each. Analysts remain watchful of the road ahead for equities as inflation is far from the MPC's eventual target of 4%, while global economies are staring at a likely slowdown.
It will all be a function of how earnings will actually pan out. And, earnings have actually moderated in the recent quarters, and we'll see what happens in the fourth quarter. Our view is that the earnings will continue to be fairly modest going forward. The growth is going to be fairly lesser compared to the consensus estimates. There will be downgrades that will happen. As far as the multiple is concerned, I think the Indian markets are on the expensive side. So that is there, but there can be a sentimental sort of recovery, especially given the drag that has been there over the last few months, especially from a US banking sector dislocations.
UR Bhatt of Alpha Niti Fintech 2 believes markets will stay in a wait-and-watch mode till further clarity emerges.
Market, of course, is reacting to the surprise element because I think there was unanimity in the market that there will be a 25 basis point hike, but that didn't happen and there was a pause. So I think the market is celebrating that. But as you know, generally markets celebrate surprises a bit more, go to some extremes. So I think that's what we're seeing in the market. There's a lot of celebration as far as this particular move is concerned. But we have to see how the statement goes, because finally it is not just about a pause that matters, but whether the market would be interested in knowing whether this is the end of the rate hike cycle or this is just a pause. As you see, the CPI inflation continues to be outside the range that RBI is comfortable with, that is 2% plus minus 2. So therefore, there needs to be some more interest rate hikes generally, if past indications are anything to go by. And if there is an indication that this is only a pause, but inflation is still uncomfortably too high above the range, so therefore they will have to probably revisit this space very soon to see whether further hikes are warranted. And if there is no indication that they are actually contemplating a complete reversal of policy, or at least a pause, an extended pause, I think the market might give up some of its gains.
Thus, despite a surprise move, equity markets remain range-bound for now. Technically, the crucial resistance levels for the Nifty 50 index is 17,600. If it is successful in crossing over this level, a move towards 17,770 cannot be ruled out. Equity markets are shut today on the occasion of Good Friday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.